Okay, guys, welcome to Stocksnipertrading and Bookmap here with Mr. Bruce Pringle. We want to express how happy we are and excited we are to have him. He's got a very busy schedule. This is a busy man. You guys can see him daily on YouTube. So look up Bookmap on YouTube, guys. Please subscribe to the channel, like, comment. They're an awesome platform. I'm very, very, very excited with this. Same with Dave. Like, we've been trading liquidity all our lives, but now as traders, when you have that little edge that can help us in the market, this is what we need. This is what we've been trying to have for the past, my years of trading, 15, 20 years is I've always wanted to have an edge against the people I'm trading against, so I love this. I love the platform. Bruce, thanks for joining. And just before we get started, guys, I got something here.
Let's get ready to rumble!
Oh, no, we don't want that. Okay, sorry, Bruce. I got to get better with the sound effects here, but so just Bruce, I'm going to make you co-host and you do your thing. Guys, everybody in the chat, let's give it up for Mr. Bruce Pringle. We're super excited to have him here, take time out of his day, and I'm excited. Bruce, you're welcome to share your screen anytime.
Okay, can you guys see?
Yep.
Okay.
Yep.
Well, thanks, Ronnie. I mean, geez, pressure's on.
No.
No, that's thank you very much for the kind words. And pleasure working with you guys and showing you Bookmap here. So Ronnie and I were talking about this kind of being it's obviously for you guys, but to get your questions answered, and then now you guys have a nice reference to come back to. It's like, oh yeah, what was the the volume dots or the settings or what was something, and this can hopefully answer most of your questions and have a good reference for you in the future. And I guess we'll just get started with some of the basics in here and talk about what Bookmap is. And how to read it or how to use it. Like Ronnie was saying, like the liquidity, I was introduced to Bookmap from a friend when it first came out. And I was just amazed. It was a rudimentary version of Bookmap. It's grown into something else now, but the core functionality is there, and showing liquidity is that core functionality. And I was amazed. I was like, can they do that? So basically, like the next day I bought the program and then started talking with the team and was able to join the team. Anyway, yeah, pleasure being here. And we'll go through just the basics here to answer those questions of what it is, what you're looking at, how to read it, how it refers to other charting platforms, and then how to subscribe to it, or onboarding as well, like how to get to our education and other resources that we have. So that hopefully is helpful for you guys too. And then the Stock Sniper guys are going to be providing some high quality education as well moving forward. So really looking forward to this. All right, so we're looking at the S&P E-mini today. And let's just go through some of the basics here. When someone looks at Bookmap originally or initially, they look at it and it looks very complex and confusing. And I can understand that. I had the same reaction as well. But over time, and it doesn't take long, you understand that what is actually being displayed here is very simple and raw data. There is no indicator here. Well, we do have an indicator subpanel, and I'll talk about this a little bit later here. But we're going to go over the main chart and some of the columns in here. So what you're looking at here, there's only 3 elements on this Bookmap chart, and they're very simple. And in fact, we can maybe start to take off some of the elements here to get an understanding of what exactly it is we're looking at here. So just 3 elements. So I'm going to take off the volume dots. I'm going to take off the heat map. Now is just 1 element. It's just streaming best bid and offer. That's it. Now, there is an edge to looking at streaming best bid and offer as well. This is pure price action. So when you look at Bookmap here, you're getting all the details, every kind of little wiggle here in price action, it is displayed. You can zoom into these levels, and we'll show sub-second levels here. That's actually where we came from, our backstory. When we get into that, I'll explain that a bit. The best bid and offer, though, let's compare it here to a candlestick chart, right? So candlestick chart here is, and this is what, a 5-minute? No, 15-minute. Let's see. 15-minute. That's fine. We'll look at a 15-minute chart. Every 15 minutes, what you're getting is 4 data points: open, high, low, and close. Now, it's a period of data. It could be a 1-minute period, doesn't matter. It could be a volume period, doesn't have to be time-based. It could be range, Renko bar, whatever, some sort of condition. Within that condition, it aggregates data. You cannot see what happens inside this period of aggregation. So, for example, this move to the downside, well, what exactly happened? We know it's a big candle. We know it's a big move to the downside. But here's what really happened between this 15-minute period here and here. We consolidated, and it looks like about 5 minutes into it, we broke. We broke hard. Where did we go? We came down to this swing down here, and we got a little bit of a bounce. Let's take a look at it here. We'll zoom in. Understanding these little areas in here is kind of critical, because we want to understand the reaction or the behavior of traders in these little areas. So we have this move down. We have a little bit of a pullback. It doesn't come back up here. It's a pretty strong move. And then we're going to find more sellers. We'll turn on the selling in just a minute, but we're just looking at the price action of the best bid and offer. We continued on lower. We have a little consolidation period here, broke it, kind of bounced around, and then broke again. So within that period of 15 minutes, there's a lot going on in here that we have no clue by looking at a candlestick. So that's kind of the drawback of a candle. And like I said, you can divvy it up into 1 minute, but it's still aggregated data within a 1-minute period. And these little areas in here, for example, look at the structure here, and then look at these little retests back to that structure, and then the continuation to the downside. So when you start to understand market structure that's created by the price action, this can give you beautiful areas for maybe a pullback and continuation. You can even see it again down here. We have drawing tools in here, and you can see what I'm talking about here. So here's another one. It broke again. It pulled back here, kind of did a little double top in here, and then we continued on down. We continued on down and then broke that structure and continued to the downside. So obviously we're trending to the downside, but what we want to understand in these little structural areas is the order flow. And this is where we're going to get context. The context is going to be, we'll start with the volume dots and what you're looking at here. And let's get rid of we'll keep the structure for now. So if we look at the volume dots in here, these are the aggressors, the transactions of market buy and market sell orders. Very, very simple data. So if it's a red dot, it's a market sell. If it's a green dot, it's a market buy. A red dot, market sell, hits the bid and takes liquidity from the best bid. If it takes enough, it will go to the next level. So it is the aggressors that are moving price. Now, the size of the dot and the color of the dot give you a kind of volume reference here to what transacted there. If you want the very specific data, you can hover over that dot and you can see, you get the date, the time, what was on the ask, and the amount of volume that traded at this price level. So that's how to kind of understand this reference here. Green dot, you can see the buying in here. It's not that much compared to the selling. So we continue to go on lower here and continue to find, more sellers at lower lows here. And that's very typical in the order flow. So in a trend. So the understanding this context here. So look at the pullbacks. Let's just zoom in here a little bit. And let's make these volume dots a little bit bigger. Okay, so we can see it a little bit cleaner here. So sellers in control moving this market lower. Pullbacks are shallow. It didn't even come back to here. More sellers at lower lows. Buyers starting to come in a little bit. Buyers coming in a little bit. Also come back up here. Not too many up here. And then we kind of come down here. We're looking for either in this area right here, typically in this little structure here, we're looking for sellers to drive it down to the bottom of the range. And we didn't get that. We didn't get too much of that here. Well, we sure got them down here. You can see the sellers. And now what are they doing? They're moving it away from this structure. And they have enough volume to do that. Now, here the buyers give it another shot here. Try to attack back up into these areas here. Not enough buying. Find some sellers. Here's a beautiful example of exhaustion. We come up here and there's no buyers. So on a retest in a downtrend, we're not finding buyers up here on a retest, looking for sellers to come back into these areas here and drive it back down to the lows and potentially break the lows. So I'm alluding to all sorts of strategies and setups in here, but what we're purely talking about is the context of the volume within the price structure. And that's it. So just two elements here. If you like looking, we'll look at some real-time stuff here as well. Yeah, Ronnie originally wanted to do the webinar at 4 p.m. or I think after the close, and I was like, well, it's a lot better if we could do it during live market and we can do some forward-looking analysis here and apply this order flow to where we think price might go next. So we have this context of the volume in here, now there's another piece here though that's missing, and this is very similar to maybe footprint charts or market delta charts, except there's big difference. Number one, the big difference here is we can see all these little structural areas in here. You're not going to see that in your market delta chart. The reason being is going to be on a bar, and that bar will have some sort of aggregated condition. When it starts a new bar, then you're going to get, the volume information on that new bar. So here, though, we have context of all the structural elements with the volume. And I think that's a pretty nice edge to be able to understand that. In fact, a lot of times we can see where the footprint chart guys or volume delta or market delta guys get in a little bit later on pullbacks to some of those areas. Whereas like in here, you've got a nice move to take it down, take some off, maybe even look for a retest back up into some of these areas and then short again. Anyway, just want to make some comparisons in here to other market visualization software. So anyway, just two elements, very, very simple, very straightforward here, nothing complex. So now let's add one more element on here. Where is the other side of the trade? Okay, who's taking the other side here? We don't know that in here. We just know that these are the market buys and market sell orders. So we want to take a look at the liquidity, and that's where the heat map comes in. And this is what confuses a lot of people because they don't really quite understand liquidity, and for good reason, because we've never had really access to it before. We've had tons of access to transactions and aggregated data and indicators, but we haven't had too much access to liquidity. So what is the liquidity showing us in the heat map here, or how to define this? It's actually pretty simple and straightforward as well. I know it looks complex, but just hang on for just a second here and we'll go through it. So I'll take the candlesticks off for just a minute. and take the volume dots down a bit. Okay, so in here, everything to the right of this vertical white line is the current market. This is our current best bid and offer. This is our last traded volume here. This is our price ladder. Okay, now we're going to go over one of the columns here. It's called the COB column, or current order book. This is your level 2, your dome, whatever you want to call it. It is showing you limit sell orders above current price and limit buy orders down below. And that's all it's showing you. This is liquidity. This is the auction. We can start to see, well, you can see the problem here with looking at, a dome. The problem is, okay, we can see the current market, but when they pull that liquidity, we don't know what was there before. So what Bookmap does is we take this high liquidity in here, like 240 contracts up here. Okay, it's red. So the colors up here in the top center of the Bookmap chart, red and orange is very high liquidity, then yellow, then white, then blue, and then black is the least amount. So this is high liquidity up here at 80 and 79 3/4. We know from the numbers here, but we also know from the heat map, right? So that's it. Now, where this gets really interesting is when they pull that liquidity, you'll see it change here in the heat map, like right here. They just added in. Now, what Bookmap does, and they just pulled. So what Bookmap has done is it records it and plots it on the chart historically. So we know that this guy came in with high liquidity here and then pulled it. And that's all this different striations in here in the heat map is showing us. It's just the adding and pulling of liquidity. So it's not complex at all. In fact, when I zoom out, you notice that some of the colors change a little bit. The reason being is that the liquidity is it's recorded. It's set in stone. We can't change what happened. But we're changing the heat map in reference to everything else in the viewable chart. So if I zoom in, it looks like it's red maybe. If I zoom out, it looks like it's maybe yellow. Okay, so it's the same amount of liquidity. And we can hover over and look at this and know precisely what it was. 168, 170, etc. Something like that. But we've recorded it. Now what we have is another context here. So we can look at this liquidity in here and start to understand the behavior of the participants. So we can see that, for example, this is likely, not 100%, but boy, I'd be like 99.9% sure. It's likely the same player. He had high liquidity in here. Then at a certain moment, he pulled it and then added it up here. And it started to transact. Now, how do we know that? Well, let's zoom in here a little bit. You can see transactions taking place right into this guy's liquidity. So did this guy want to be a buyer in here? And the answer is yes. Okay, now partially, because you can see he kind of pulled a little bit in the heat map here before, then it started to transact, right? So we can answer or start to understand the behavior of this larger player. And did he want to be a buyer? Now, see what that can lead to. It's likely the same player again in here. And there's a context now. He's starting to buy down here. And we can see that, wow, now there's quite a bit of interest, even on other levels in here, down below here and above, and one above here. And now we just saw this pop in here too. So we're looking for 77.5 to transact. Okay, so we just have that. And now he pulled too. So let's see if we can get enough buyers to reach back up here, 77.5. And let's look at maybe other levels. Okay, well, 80. If we get enough green dots in here, we're looking for them to charge right up into this liquidity up here. And that's it. It's not rocket science or anything. It's just understanding the participants in the auction and what was the reaction of the market participants. So this high liquidity comes in here. And then what happened? Well, we found buyers. Okay, they started to get filled in here. And then we found some buyers move it away from that area. Their reaction to this was like, wow, okay, that's all of a sudden popping in here is high liquidity. And we don't find sellers, we find buyers. So we're looking for maybe a move back up into high liquidity on the offer. So now we have all three pieces here, and we're just reading the context of these three pieces. So the market structure, which is really, really important. Understanding market structure is essential. And then we want to look at the volume within that structure. So where is it transacting? And in fact, if we don't, then the next level is not only where is it transacting, but what about the other side? Where do they want to buy? Where is their demand? Where is their supply? And it's the context of these three elements. Now, if we just take the heat map off here or dim it, we don't know that here, right? We just don't know. You can read the volume in the structure here, that you can see sellers, some buying, sellers, some buying, but we're still kind of in lower lows and lower highs here. And then no sellers or very little selling, now buyers up here. So you can read it that way, these two elements. But this added layer of context in here really helps. Okay, now we've just traded up to 80. Okay, that was our target, was to trade up to, first was 70, let's see, what was it? I guess it was 77.5 was our first. And then our second was up to 80 here. Okay, and we've transacted. So we're just kind of reading the participants in here and starting to understand their reactions to this price structure, or the elements in here, the price structure, the aggressors, and also the heat map. And that's really it. It's just an overview here of what we're looking at in Bookmap. And we can dive into some other things in here. We can look at some stocks. So I've got the NQ. We just rolled over to the October contract in crude. I've got December gold, and then you can see some of the stocks here: Nvidia, Apple, Amazon, Tesla, and I do have Bitcoin. It's Binance futures. Kind of have a unique product on that one too. And then let me just go over some of the columns in here too, because we have all sorts of data columns in here. Most people are looking at or like the CVP and SVP columns. Very, very simple. Again, it's just showing you a profile of what's within our chart range here, a volume profile. That's it. So if we zoom in, I look at a different range within my viewable chart here, you see the profile of it. If I zoom out, I have more data, and you can see it populates that data in here. This SVP stands for session range volume profile, and that's simply showing you, if I zoom all the way out and I show my entire session here, this is the volume since when I opened up my Bookmap, and that's it. So the now in this case, the chart range is equal to the session range, so you can see the profiles are identical. There's filtering in here. There's all sorts of features in here. I just want to go over the basics. And then there's also this, well, let's go over some of the indicators. I do want to show this here. I think it's rather unique. And we can look at the on chart and sub chart here. But the stops and icebergs. But our, by default, cumulative volume delta in the sub chart we have. And it's a very, very blunt and simple indicator, just showing you buy minus sell, but plotted here. And how can this be helpful? With understanding you guys probably know about your cumulative volume delta. Let's just zoom into this area here. This is a good example. Here we have, cumulative volume delta dropping. Okay, now I'm not showing a great divergence example, like reversing and going 10 points or something like that. But this makes the point. Here, we have quite a bit of selling, but price isn't moving. Okay, almost 1,000 contracts here. We can look at this here, and it's all selling. Look at cumulative volume delta dropping. Okay, so there's divergence here between, at this moment at least. Now, you know, I don't recommend that you look at everything because in terms of divergence, because there's probably going to be some icebergs in here is my assumption, but there was still more selling pressure that came in. However, the divergence here, and the idea is the indicator is showing the drop here, but price isn't, and that's your divergence. Okay, so anyway, you can start to look at these areas in here and see that, wow, okay, why did that happen? Is because they're on the bid here, absorbing, as well as we're going to look at some icebergs in here. Okay, so let's turn on the stops and icebergs, and I want to show you that. So there's huge iceberg buying right in here. And how did I know that? Well, because this didn't make any sense with CVD. What are icebergs? Icebergs are really simple. These are larger players. They're using an order type, iceberg order type or hidden order type. And now these are native to the CME, okay, with like, trading technologies. Maybe you're co-located and you have your own algo that has its own icebergs. These are not them. These are from the CME as an order type. We can see in here that they are buying. Okay, so they're absorbing this, even though typically what we look for is this here with CVD. Like here, lots of absorption here, CVD will be dropping, but price did not drop. Instead, these guys stayed in the order book, okay, and they also started to transact here, trying to drop price, and they weren't able to because someone's on the other side with a hidden order. Now with an iceberg, it doesn't show up in the current order book. Only a tip of it. So let's suppose like, how many do we have here? We had like about 300 in here and about 100 or 200 here. So they are hitting the bid, but they're not able to make price drop because someone's on the other side with their iceberg. Then iceberg order will send maybe like, let's suppose it's this 200 lot. It'll send in maybe 20, 1/10 the size. That will show up in the order book. It will transact, and then they'll send another 20 really, really quickly until they get filled. So that's why it's called an iceberg, because the tip of the iceberg is only what you can see, but there's a lot of market depth behind that. In this case, there's about 500 altogether, which is pretty big for a pretty good size for the S&P. For the NASDAQ, it would be huge. Anyway, let me show you the on chart as well, and how to read that. So we'll just show this, and it is populating here. The red line, these are stops. Okay, so this is really interesting to see this dynamic in here. So the blue line icebergs, the red line are stops. Yeah, actually, let me turn this off for just a moment, and then we'll turn it back on. The context here, what are stops? Okay, well, these are stop loss orders. Okay, but now we don't know if they're stop loss orders or if it's someone placing a sell stop and entering the market. It's typically a stop loss order. It's people, retail traders like ourselves, that have had our stop hit. And here it is. Now we know this. We know that this is just fact. Stops with the MBO data that you can get from Rhythmic for futures. We know that that's just a fact here. I don't know if you guys know about MBO data. It's kind of metadata that you can, CME has offered for like, I don't know, 6 years or so, I think, maybe 5. And then here's the icebergs. Who's using icebergs? Larger players, because they don't want to show their liquidity. Who's using stops? Smaller players, because they don't have the account size to withstand it moving against them. So you get stopped out, you look for the next setup, and enter. Okay, here's a dynamic here between professional traders or larger players and smaller retail traders. As they're buying here, absorbing this, goes a little lower, and everyone, the retail traders, are getting stopped out. So there's this dynamic here you can see and start to understand, wow, this is rather unique transparency to start to understand this dynamic between larger players and smaller players. That actually is kind of a V bottom here with this move to the upside. Turned into a pretty nice move. Let's see where it is now. Yeah, okay. So yeah, down to just below this 42.70 in this liquidity, and then we see our icebergs here. Okay, so anyway, just wanted to go over that here. It's I'm fascinated by it. I think you guys would be too. So I wanted to show it. This is actually sold separately, and I'll get into all that maybe a little bit later. Anyway, this is the basics of Bookmap. And the elements on the chart here. Let's read a little bit of the current market and try to glean some insights here on what might happen here with the price action. Okay, so we'll let's put the candlesticks on here just so we have some sort of reference.
Bruce, can you show the team maybe crude or
Sure.
gold?
Yeah, sure. Okay, crude just rolled this contract, and it's looking pretty good, actually. The volume here is looking pretty good. You can see crude oil is now just breaking out of 90, and pretty strong buy volume here. So again, here's your context. Volume profile traders, you guys want to take a look and start to understand the breakouts and the volume behind it. Well, here it is. Like, here's our volume profile here. And you can see it's in between these two levels of high liquidity in here, and they're trading into this. There's appetite here to trade into 90, and they do many times over. It created a skew here in the profile, a P-shaped profile. Come back up here. We had to come all the way back down here, trade into 89. They got filled down here. People are going to get stopped out down below it. And likely be going short in here, because look at the stop run to the upside. Let me turn this off. Okay, and a lot of people getting stopped out here. So this instrument, or crude oil here, is driving away from this previous value area right now. Okay, the high volume node being this kind of just around this 89.50, maybe a little bit above it. And this is what it takes to move away from a value area, to rip away from a value area. You typically, you don't need to have it, but boy, typically this is it. High volume, okay? And they'll trade right into liquidity and trade through it, like in here. And you're gonna see another stop run up there. Yeah, everyone who got it wrong in here helped fuel this move here to the upside into this 90.50. Okay, so now, yeah, we're up to 91. Yeah, looks like a good move, and it's a buck. In fact, you can start to see, like, let's suppose you guys are looking at measured moves, for example. It's a buck here. It's also a buck up to here, 91. So that's not a bad place to kind of maybe take some off, and then maybe you got a runner here, but at least reduce some risk. It's done a nice move. A $1 move up into 91. So different ways. We're not here to talk about trade management too much. That's where Ronnie and Dave will come in and talk about their setups, their way of looking at the market. We are just the tool. We're just they're the artists, and we provide the tool. Okay, so hopefully the tool is good enough to provide the artists with some deep insights.
This is an amazing tool, Bruce. I just took profit at $91. I was in from 85 on the bottom. So, so it's a great tool, guys.
Wow.
Amazing tool.
Wow. Very nice. So yeah, this, you can see that this is a higher time frame move, right? This has been working all day. In fact, you can even see this liquidity at 89 and the break of it. Now in here, it's pretty choppy. It's pretty back and forth, but it's still doing the same thing. This is a structure here. It broke out and started to trade into this kind of structure here. Now, it kind of came up and it did, you know, kind of multiple structural areas in here. But really, the bigger structure, the bigger picture here is pretty straightforward. We have this kind of narrow range here from kind of early morning. The open 9 o'clock here, a lot of back and forth, but it did break out above 89, and it was between kind of 89 and 90. And then you can see that it picked up here just after 10, trading up into 90. And you know, if you're looking for their higher time frame moves in your maybe your swing trades, this is a good example. You can use this to your advantage here. You don't have to be scalping for like 2 ticks. If you come to like some of our webinars or our education, we're always looking at very, very low time frames. We have a reason for that, is because we want to go through live action. Yeah, you can scalp very successfully with it as well. But you really want to, we want to go over as many instances of understanding order flow as possible, instead of waiting around for like a higher time frame move. But the higher time frame moves are also showing very nicely here. We have some stocks as well. We'll maybe jump over to Apple. Different animal, and trades differently here. It's really interesting in stocks. We have high liquidity. Now this is pre-market here, and I don't even have to look at the timeline down here. I know that this is the 9:30 cash open because look at the liquidity that comes in here. Okay, larger players, they park their orders here and they're saying, I'm up here at 175 to be a seller with 85,000 shares. If you want to deal with me, come on up and make the deal. They're down here, and they looks like they kind of pulled, or some traded here at the open around 173.50. Went a little bit lower here, never came down to 173, and then they start to come in here at 173.50 again. Okay, so our context here is well, it's really kind of sideways, but there's definitely a slant to the upside here, no question. Okay, because we made a higher high here. They're bidding at a higher level, and then this is very high liquidity in here. And I want to talk about this because this is kind of important here. We get this question all the time. This is high liquidity, no doubt about that. But it's short-term high liquidity. Typically, you'll see short-term high liquidity have a reaction to the participants in here. Typically, they don't go after it. It skews the auction. Now, it really depends. I mean, sometimes they go right after it. Someone comes in and price goes right to it. It shows that there's appetite. There's buyers interested in trading with those sellers. But if you think about it, you know, it's like going to any market, a farmer's market with potatoes or tomatoes or whatever, and a truck comes down the street with more supply. Well, there's more supply, therefore there's less interest, basically. So it's not worth as much, maybe it's worth less. It's a spoof kind of thing. Now, this isn't spoofing, but I don't know exactly what it is. It's just a higher time frame. I'm sorry, lower time frame trader with high liquidity, and you can see him pull and add a little bit higher here, and then pull and add higher here as well. Now he's pulled away from the market. This offers buyers a pretty clean shot up in the 175 here. If we can get buyers in here, and we can see that what's the context in here? Do we find buyers? Do we see big green dots in here? And the answer is no. Okay, but yeah, we're looking for it to trade maybe up to the swing high here. So around 174.70, and then maybe up in the 175. Okay, so you can also look at these types of things. You have your reverse head and shoulders in here if you're a pattern trader. It's just all here. You can look at a cup and handle pattern in here as well, looking for those green dots as the likely scenario here. Okay, we got to go through many scenarios, and still not finding a lot of buyers here at the moment. Okay, very, very few. So something's wrong in here. We should see some green dots. we should see something. Yeah, that's interesting. All right. Well, not sure what happened there with Apple, but yeah, we should see some transactions in here. And here they go. All right, they're trading into it. Now let's see if we can get maybe up above it here just a little bit. I'd be looking for green dots in here, and then the boost up into the swing high here. Let's jump over. We'll come back and revisit this, but something happened here with the data from DX feed, and I'm not sure. Boy, it's the same here in, yep, same here in Amazon. Now that's unfortunate. Okay, Tesla, we've got data in here for Tesla. Okay, so.
But Bruce, you can still trade that way. Just because the volume dots are not there, we can still
yeah,
follow the chain.
No problem. Yeah, you can still trade it, except now you have one less element or context here.
But that's with technology, guys. You know, they could have issues with the live data feeds, and then within a couple minutes it might be fixed. Like we've seen that with our brokers too, freezing all the time. The servers freezing, and so it happens, guys. That's technology, you know.
Yeah, and we're not the data provider actually, so we can start to get into some of the subscription stuff as well. When you get Bookmap, data is not included. Okay, so you will need to also subscribe to data. So there's a Bookmap subscription, and then there's a data subscription. And that's just how it is. It's how TradeStation started out. It's how NinjaTrader started out. They were just platforms. They became brokers much later. So anyway, and it's I haven't seen a DX feed kind of not show that data in quite a while, so it's kind of a rare event, to be honest. Anyway, we're trying to read that context up here, and we can't read the volume right now. And what we can read though is the liquidity heat map, and someone came in with you know, about 10,000 shares here. Market doesn't seem to like that.
That was me. I'm just playing, guys.
So actually now they're coming after it here, it looks like. So you can see, like, you know, we're trying to read the players in here. In fact, there's a little white line. Can you see that right here at the end of in the queue here? Well, that's our large lot tracker, and it's showing you that this player here, it's likely one player with those 10,000, you know, you can see other people coming in, but it's like probably him with one trader with 10,000 shares. That's our large lot tracker. It's an algo we put together. The way that these come into the order book, we can read it and understand that this is a larger player. So we can get some insight also from that add-on. Okay, so those are the basics here. We can get into maybe some live analysis quickly, and I don't care what market we look at. We can look at crude. We can look at since you're in crude, Ronnie, maybe we can take a look at that.
Can we look at gold? Gold. A lot of guys love gold in our group. They're
okay.
They're gold diggers here, Bruce.
Okay, all right. We got some interesting stuff in here. This is very indicative of a spoof in Bookmap. Yeah, kind of frown upon that. But here it is. It's all recorded. In fact, you know, it's since CME Rule 575 spoofing is illegal and a prohibitive practice, but we can kind of look at this, and you can see how they're kind of getting away with it because they're getting filled in here with their orders, but they're layering in with all these different layers. You know, every other tick here, basically, they're showing very, very high liquidity. You can see when they came in as well. These came in first, then these, then these, then these, and then, you know, these up here. And these ones filled. They got filled here. So is it a spoof? Well, it certainly looks like it, but they got partially filled. So legally, maybe they can get around that. Now look what they did. And you know, boy, it makes me very suspicious. It's got to be the same player, because as soon as they pulled this high liquidity levels of high liquidity on the offer, now they're adding on the bid. Okay, now that's what spoofing does basically. Most of the time there's something similar to this. So, you know, they can try to get a better price here and then skew the auction and try to get to float back up into their orders that are probably up here around 75. Okay, so looking for a move back up into here to 75. So, you know, just by looking at this order flow phenomena here, we can gain some insight that, you know, I would say likely we're going to trade up to 1775. So you can, again, like you just wouldn't see that if you don't have access to the heat map, right? So that's where this added layer of data or information can give you more insight.
It's game changing, Bruce.
Yeah, I think so as well. I'm convinced by it. Like, you know, like I said, I was a Bookmap user to begin with, and you know, was amazed by it, and then became part of the team later, which was very, very fortunate. So yeah, let's see if we can come back up. Maybe you know, if just to kind of trade management, it's all, this is where the art comes in, like I said, but look at some of the swings and also previous areas of liquidity and or where sellers dropped it from here. So maybe it doesn't get up here, but you can always front run high liquidity as some trade management ideas get filled before the larger players get filled. You have the information in front of you. You can see how long they've been in here. And have they been adding, have they been pulling, etc.
Bruce, with your experience in the book, have you noticed that some securities tend to be more manipulated than others, like with spoofing contracts and things like that? Do you find, like I find trading gold is very manipulated the years I've been trading it compared to other securities? Do you agree with that?
Yeah. I mean, thinner markets are wide open to that. In fact, in the S&P, a lot of times, you know, we'll see it's a pretty thick market, but to see that kind of order flow phenomena, you can actually see it a lot better sometimes in the pre-market. The reason being is that in the pre-market, before the cash open, it's a lot thinner. So you can kind of see the behavior of like in here, you know, some of these guys in here on the bid. Maybe trying to push it down again, they lift and look for the target up here. So there's a, you know, a small example, but anyway, the yeah, I would agree with that the thinner markets like that are typically more vulnerable to that kind of behavior.
That's why, guys, as retail traders, you suffer a lot of losses trading gold because it's very manipulated. So that's why we tell the guys careful trading gold.
Yeah, and it moves. So but you know, this should help give you a little bit of insight, you know, to how you might want to manage that, or where you might want to get in. Stops and icebergs as well can give additional insight, you know, down into, I mean, look at the icebergs. They've been kind of absorbing from this point on. In fact, during the webinars, we look at these kinds of this climb here, steady stop out on the way down, a steady iceberg move on the way up. So let's take a look at this. Like, for example, you know, it's kind of flatlined in here. Right around here, it starts to move. So we see that there's buying icebergs all the way up into current market right now. So we can even kind of look at that as an area and start to get some information here from here on down. Okay, so these, if that's the case, then wow, 75 is a great target. Maybe even a little bit higher, maybe 76. And then we can start to look at that and say, well, okay, well, if a larger player is in here and these icebergs, if it's significant, okay, we want to see, like, you know, quite a bit. And I don't know how significant it is. It's from like about 250 or so on up to 800 right now. In gold, I think that's quite a bit, but it's over, you know, several hours here. However, if we get enough buyers here, yeah, we're looking for it to come up back up into these areas here. Those guys are likely in profit somewhere around in here. Okay, so we're just kind of testing into that. But once we get into here, a lot of times in the S&P, it's like that's where you'll see the breakout. And all of these guys would be in profit at that point.
Bruce, do you find with these indicators that they kind of like a lot of traders, they look for crossovers with EMAs and like oscillating lines and things like that? Do you think that this, if you were to look at like these crossovers where the stop hunts and icebergs are crossing over, could foreshadow maybe
No,
a move coming, or no?
I think it's erroneous to look at this as a crossover. But the way to look at it is, wow, okay, you know, what was the context or relationship? If I zoom in here, you know, you'll see maybe a different cross. But it's more like, wow, people are getting stopped out, but, you know, they're buying icebergs on the other side. And, you know, then look at some of your price structure in here. And you can see that if they're buying all the way down here, now we don't know if the icebergs are buying or they're covering, but we just know that we know that this is buying icebergs. Okay, we know that they are long, or that they bought, and understanding that is pretty good, because we start to look for, like I said, retest back up into these areas. But the crossover here, it's yeah, we have the context in here, but we just want to understand that kind of context. That's I think the most important part. This is not a signal service type of thing. This is like, we kind of teach in our education that any indicator is a confluence. It is to be looked upon as that, not a signal, because you know, who cares? Like, the market might not care about all this iceberg buying. However, if we get enough interested buyers up in here, well, this might have some significance then, because we're aligning this as a confluence to, like, well, that might not be a bad idea then, like, to trade up to 1775. So again, we're getting into more kind of advanced understanding, but order flow is the most important part. So understanding this context of these three elements is the most important part. The indicators, if they give you additional insight, that's great. You know, so that's the way we kind of teach it or look at it in terms of indicators, because cumulative volume delta, if you've traded divergence before, how many times have you just been run over by, oh yeah, it's divergent, oh, I'll sell it, you know, and it just doesn't matter. Or, you know, stochastics or RSI, oh, it's overbought, you know, I'll sell it. And they just keep on buying, and they keep on buying and keep on moving. We want to understand, are they going to buy above this area here? Or maybe this swing here? Yeah, not bad. So are they moving it away to a new price level? Where is that level likely to go? What's the liquidity look like? What did they consistently buy through here? These are kind of the questions we want to understand. If this is consistent buying, well, then what is the pullback? Okay, the pullback's actually been about halfway, maybe, you know, 50% or so. And how much selling is in here compared relatively to the buying? Okay, well, we can look at the bars. We have volume bars down here. We also have the volume dots in the size to be able to read. And we can look at these areas in here and start to understand that, wow, okay, and here's a double bottom here. So a retest, no selling. Okay, that's good. It's a pullback. We know that buyers are lifting the market and moving it away from that previous area. Do we get buyers up here? We're starting to. If we get buyers up here at this tick right here, right now, I'd be looking for the move right up into this liquidity and then maybe this liquidity here. Okay, so did we get them? Not really, not yet. Let's see if we get them on another rotation though. And now we're starting to read the microstructure in here. Okay, now let's see if we get buyers here. Looking at this 7210. we got a skew in the order book, more on the bid here. Do we get buyers? There's a little bit more. Let's see if we can get more up there. All right, right up here, this is where we gotta find them, and then we're looking for that move up into this 72.40 and 50 area. Here we go. Looking good here. I like it. And we get another rotation.
Yep.
Yeah. But this is still in play. Okay, it didn't break this. It's just back and forth right now. It did exhaust up here, right? But let's see.
It's leading into 2 p.m. Bruce, watch in 5 minutes. Watch the move in 5 minutes.
Okay.
2 p.m. is very volatile.
Okay. Yeah. So anyway, we're again kind of looking at this context in here, and sellers are coming in, but they can get upended too. If we can get back up above these, even in this move here, if we can get buyers back up above 71.90 here, right up in this area here, these sellers will likely have to get stopped out on the way back up, right? So we can we're talking more about kind of trap volume, starting to understand where they might be trapped, and then anticipating a stop run up into this area here or higher. Okay, so this would be fuel to the fire, but what we do know is the buyers came in here and moved the market. Okay, so we're still kind of looking at this structure here and seeing if we get our sellers or not, and we are, but it hasn't really broken that structure. So let's see if the buyers can come in with another attack here, back up to this 72.10. So yeah, so this is some of the kind of reading we do basically in our webinars, like all day long, just understanding these zones in here. And one of the things in our webinars that we do is it's very basic reading with no real strategy. We go over many strategies. You can look at volume profile, you can look at candles. Let's look at candles. And we'll look at a 1-minute candlestick chart here, and start to understand this top of the range here. Okay, here come the buyers, right? Look at the sellers. Look at how it closed down here. What if we do get buyers up here? I would anticipate a short squeeze. Okay, so that would be a scenario to take a look at. And is this 30 seconds or 1 minute here? Yeah, it's 1 minute. Okay. So we don't go over too much strategy. We just go over order flow reading, so that anyone can apply any strategy in here. So Ronnie and Dave, they'll go through the way that they trade and apply order flow to get deeper insight to what's going on. So we'll just take a look at this. We'll dim the heat map a little bit here, and maybe make the volume dots a little bit smaller so we can look at the candle. Okay, so we're going to look at candlesticks within. We can make the width a little bit bigger. Candlesticks within this price action here. Okay, I'm still pulling for these bulls. Okay, got to get back up to the top of the range and see if we can get those buyers we're looking for. We're up here. I'm just not seeing buyers here. So not quite ready yet.
Patience and discipline, guys. Patience and discipline. Why don't we get a poll in the group? Who is bullish on gold breaking? Who is bearish on gold? Bullish, bearish, bullish. Bull,
This is
bull.
very
A lot of bulls in here.
A lot of bulls. This is very small time frame, but we can still gain an edge in here on these small time frames. by just understanding these three elements in here.
Yep.
So best offer came up here.
Yep.
Nothing traded though. So we got to find buyers up here. If we don't and exhaust it out, watch this. If we get sellers here, these are the scenarios we go through. If we get sellers down here around 80, 71.80, and we'll look for a distinction, like distinctive selling, then we're going to come back down into bottom of the range and maybe even bottom of where not only, where this move, but it could come back down to the bottom of this range.
Here comes the volume, guys.
Here comes the volume. Now, this is where we see we didn't get buy or sellers down here. Now we're getting some buying up here. A little bit more, and then we should get the pop. Yeah, and should be pretty decent. It should come up to somewhere around in this area here, unless someone comes in the order book.
It's building. Like you can see, the lower time frames are building. They're building, but
yeah, and this is where that second context here of understanding the order book. See how they come in here, and what's the appetite now? Are they adding on the bid, or are they adding on the offer? Or are they pulling on the offer and adding on the bid? And we're finding buyers. That's a great scenario. Then we look for the move. Yeah, just nothing really shaking right now, but looking for one of these two scenarios here. Let's read our candles. So yeah, this one moved it away here, but we came all the way back up here.
But we couldn't find any buyers up there. So.
We didn't really. I mean, we found this poor guy up here, which is a 2 lot. Yeah, now we're getting our sellers here. So
can you show the team, Bruce, one more time how that is a 2 lot, that buyer?
Sure. Well, we can zoom in here, and we can use this data tip tool, or you can look in the lower left-hand corner here. So if I hover over it and I look in that lower left-hand corner, it says it gives the date, the time, what was on the ask here, and then the volume. You see the volume says 2.
That's awesome.
Same here if we just use this and then hover over, same information. So yeah, that's it. Rotate it all the way back down here. So let's look at a candlestick pattern here. All right, so your candlestick pattern, you would be looking for, now our buyers are coming back in, we're rotating back up. We're looking for, if this is going to be a buy signal on a 1 minute candle. Okay, well, let's look, first off, what's inside of this candle right now? Okay, there's buying and selling inside of it. All right, so that's not really telling us much, but if we get more buyers kind of at the top of this candle here they are. Okay, now let's see if we can get just another tick here, this tick at 72 even with buyers. Then we're likely going to get the move. We're looking at like more buyers, trap sellers, and then the move higher here. Here we go. See them pull and add, pull on the offer, add on the bid, finding buyers. Let's see if we can get here, and then some. Okay, and also looking for some stops. We see stops got triggered here on the way down. Looking for some stops on the top of the range here. Okay, now micro ranges, or these smaller time frame ranges, it's, we can still read it, we can still apply it. It's just you get a lot of back and forth, especially in a really thin market like gold. Okay, so however, boy, I'll tell you, compared to the ES, I much prefer the NASDAQ. It's thinner, but I just like the way it moves. I also like crude oil, but gold, boy, it's sometimes it just does some wacky stuff.
Yep. You hate it and you love it.
yeah, exactly. It's great when you're in it and it's going your direction, because it'll go. But all right, so here's our candlestick pattern. This is what we're looking for. All right, bulls, you got it. let's see the squeeze and let's see the move now.
So now guys, candlesticks 205, your new 5-minute frame is opening up. So those are 5 singles right there that we just watched how they accumulated. So now here's the open of the new 5-minute frame, and look at the bodies, like they look good, but look above us. There is still a lot of limit sells up there.
So we came up to this 40 level. That's what we were looking for over here. Yeah, looking good. Here we got more buyers again. We've got enough seller above all these guys, and we're above these sellers here. So we're looking for the squeeze back on up to the swing up here, as well as the liquidity up here at these levels here. Okay, so it's just taking some time here, but it's starting to do it.
But that's 10 ticks, guys, on gold. That's 10 pips right there. Like from the bottom where the wicks are, 1771.40 to 1772.40. That's 10 pips, guys. You know, a lot of scalpers, micro scalpers, we're looking for 5, 10 ticks like that, and we're in and out of the market, just like a small move like that. So this is very interesting. This is amazing, Bruce.
Yeah, I mean, this is kind of it's taking its time in here, but basically, again, let's take a step back though. I mean, we're reading each individual 1-minute candle, and you can apply the order flow within each minute here. No problem there. But let's look at the bigger picture here. Okay, we had the spoof, we had the reversal here on the spoof from offer to bid. We found buyers in here and some back and forth in here. Yeah, and here's a wick, right, that just kind of showed up. Yeah, I want to see a bounce off of this right here. This is kind of top of this little range in here. A bounce off of that and more buyers to come in, and then and move it on up here. Okay, now order book wise, you know, we're between 40 and 60 here, so an 80 cents kind of tick range here between liquidity. Okay, now what we're looking for, see they're starting to pull here. That's a good sign. We want to see them add on the bid, and we're looking for our buyers. Okay, and anyway, where I was going with this was the take the candles off for a moment, is the structure here on our higher time frame, and we can look at it here. So you know, we've got this structure, or even you know this structure here, and then we have this one here.
Bruce, can I just for everybody, like the price of gold is like, and what we have here, the numbers are different. Like, can you explain that? Why? Like,
sure. I mean, I'm looking at the Z contract, the December contract.
Right.
Okay, and maybe they're looking at I don't know, something else.
No, like trading live, like gold is like 1758 right now, and we got 1771. Can we just like we're looking in the futures contracts? This is not spot. Yeah, so can we just like let the group know about that, because maybe there might be some questions about that.
I would imagine they're not looking at the December contract.
Okay.
You're probably looking at a different month.
Okay.
Anyway, this thing is just being still rotational here. We're back in the middle of the range here. Another scenario, I mean, volume profile, guys. Here's a beautiful profile. Okay, so now, you know, your volume, your do you look at profile, Ronnie, much, or?
I do, but
okay,
yeah, not as much as I used to. Yeah, I do.
Okay, yeah. So I mean, just some simple concepts. I mean, like again, just applying different strategies to the order flow reading in here. So if we don't get enough buyers in here, well, this is kind of the last gasp down here, is a bounce off of point of control. We, you know, typically it's the bounce off of this top of the range here, and then the move on up. But if we look at kind of this 71 level in here, okay, we might get a quick jab down into there, and then we'd be looking for supply or demand down here, and a lack of sellers, and a move back up. Now, we got to go through all the different scenarios, because we've been through, like in the webinars this many times. Sometimes these high volume nodes, we'd look for that as the primary scenario because we see buyers in here. We also have this order flow in here that's helping us. But maybe we come all the way back down, we bounce off of that, and then look for the move back up higher. If we come back down here and, you know, maybe they flip in the order book, they might be on the bid down in here, and they pull and they add on the offer, and we get big red dots, then all of this is trapped up here. And then we'll likely get the move pretty quickly down into these areas, and we'll get a pretty big stop run to the downside. It's just different scenarios. And boy, I'll tell you, I mean, we've seen, you know, we've seen it all. I mean, that happens not frequently, but it's primary scenario is we're bullish on this small time frame. The secondary scenario would be something like I just outlined. And we'll see, but we'll read it at that time when it gets down here, if it gets down here. And that's where you can get the insight, is we'll read it when it gets down here, or we'll read it like, you know, back up in these areas here. So, you know, reading the move kind of down here, but we got buyers back in here. We can use the same, even in fact, we can use the same concept here for this profile. In here, where's the high volume node? It's right here at 72 even. All right, so we need to see buyers above that. All right, so let's just kind of mark it up here, somewhere around there. And do we see a lot of buying above it? Not really, not right now. We need to see it up here. Okay, and then what we're looking for is them to pull it away from the zone here, because right now it's just at value basically. So yeah, anyway, let's put our candlesticks back on and take a look here. It's looking pretty ugly.
Yeah.
So
this is what it looks like when you're trading in the chop, guys.
yeah, and like you said, Ronnie, is patience.
Yeah.
And you're looking for something a higher probability, you know, like, yeah, you know, I wouldn't be the highest probability, but I thought they'd probably do it in here. We started to get those buyers, and I saw some selling in here, which I kind of liked because we can get the squeeze. Anyway, let's, I'm already over 15 minutes. I wanted to go through kind of some of the onboarding stuff, if you guys are interested in here, like, and try to answer some questions about, you know, what if you're interested in this, then how do you get it? How much is it? What about the data? How do you connect? How do you access our educational materials, etc. So yeah, let's go through it. So Ronnie does have a link where you can get some deals or discounts, and I have it here if you want me to put it into the chat, Ronnie.
Absolutely.
Okay.
Yeah.
Okay. So where's the chat? Hold on. Okay. Okay. So yeah, let me go through it here. So from that link, it should bring you to this page here. And you'll fill out your information. And I wanted to go over the different subscriptions in here, which you can find from bookmap.com. If you go to pricing on bookmap.com, there's different versions here, and you can get it for monthly, yearly, or lifetime. And you guys will most likely be interested in global or global plus, either $49 a month or $99 a month. And again, this is only for the software. It's not for the data. It does not include the data. But I'll go over that in just a minute. So global plus, the difference between global and global plus is the add-on indicator package, that large lot tracker. There's this imbalance indicator up here I didn't cover. There's a host of other indicators. You can see them in here. And that's what you get with global plus, which is nice. Anyway, the pricing information is here in general, but from Ronnie and Dave, this is what you can get. Now, the standard subscriptions in here, okay, digital, global, global plus, okay, what we just went through. You can get them here as well, but with Stock Snipers, we offer some specials here. They're longer term, and you cannot get these from our website. Okay, that's what we want to provide for our partners, is a special deal. So here you get Global Plus for the quarterly. Every quarter you'll be charged, or every year, annual, or you can also get a lifetime subscription here. And I'll go through the different deals here because there's some details in here. So Global Plus, this is the Cadillac version, the top tier subscription. For the first quarter, the deal is that you'll get, it's 99 bucks. Let's say it's 100 bucks. For the first 3 months, it won't be $300. It'll be half that for the first 3 months. Then it will kick into the regular price after the 3 months. Okay, so that's the Global Plus quarterly. And then the annual, the same idea. It'll be half off for the first entire year. And then the next year, it will be at the regular price. And the Global Plus lifetime, this is the best deal. If you get, I'm sorry, Global Lifetime, it does not include the indicator package, but it will for free for the first year. So that's nice. This is the best deal because not only that, you can also upgrade later to Global Plus Lifetime, and you'll just pay the difference. You'll pay $1,000 difference. So just note that the annual here, you won't be able to upgrade and deduct it. Only with the Global Lifetime can you do that. So you have more flexibility with this one here. And see if you like all those indicators. If you don't, then don't upgrade. And let's see here. Those are the deals, and we can go through the data as well. So we'll go to bookmap.com and go to connectivity. So for futures, these are all the different data providers that we connect to. Okay, so all the main ones are here. There's DXFeed, there's Rhythmic, which we prefer. You'll have CQG, IQ Feed, Gain Capital. You can connect to the API of Ninja as well. There's Transact. So yeah, they're all listed here. OmniFeed is a newcomer that's offering futures data as well as stocks data. All right, so and I'll show you where you can get DXFeed data from our website, and you can get Rhythmic data from our marketplace, which I'll show you. Stocks here. If you're interested in trading just stocks, you can get DXFeed data for stocks and OmniFeed now for US equities. These two are only for US equities. Quote Media is for Canadian exchange and London exchange. Cedros for the Brazilian exchange. Now we have TradeStation and Interactive Brokers listed here, but you cannot get data from them for Bookmap. It's actually instead of getting data, you're actually going to be sending them data. So you can, if you have the Global Plus version, you can connect to your TradeStation and Interactive Brokers account, but to send them your trade data so you can take transactions. So that's how that works. Crypto guys, you guys are going to love it. We connect to 21 different exchanges, and we have some interesting products over there too, which maybe we can talk about another time. So yeah, that's the data. I do want to show you the marketplace because that's where you can get the Rhythmic data for futures, which we prefer. We'll open up a new tab here. Okay, so you can get it right here. Now, it depends on what kind of package you want from Rhythmic. This is not from us. This is the Bookmap marketplace. So this is a structure for third-party vendors. So maybe, you know, Stock Snipers, maybe they come up with an indicator, a proprietary indicator, which maybe they would want to sell here in the marketplace. So that's what this is all about in here. And you can get Rhythmic data here from Rhythmic. We're just the in-between salesman here. And the different packages in here for Rhythmic, if you just get CME data, okay, that would be for the stock indexes that we've been looking at, and also the currency futures. But gold, no, you can't get that with a CME only. You'd have to get COMEX. If you want to look at crude, then only crude or energy, then you would be looking at NYMEX. But the best deal would be just get the CME bundle. That would include all of these indexes here, all 4 of them. And then if you click on that, you'll see it's 99 bucks a month. We don't have any control over this. This is just from Rhythmic. Okay, we're not the data provider. So you need to bring your own data, or you can, if maybe you're with AMP or S5 or EdgeClear or one of our partner brokers, you can also get data, the Rhythmic data or CQG data from them, and connect Bookmap, and then you can trade right into your account as well. All right, so that's the product. And the data. I want to show also the onboarding here. So the reference to materials here. Let's click on the more button here, and then we'll go to education here under resources, or you can go to education up here as well. And then you'll click on go to education. All right, so this is our onboarding in here. We have it structured as 1 through 6, getting started, some videos in here. Bookmap basics, going through the basics in here. Our educational course. Okay, I would recommend that you watch parts 1 and 2 at least. They're about an hour long each. It will go through the basic market mechanics of what makes the market move, and then also auction theory, and starting to understand microstructure with these 2. That will provide a very good foundation. And then practical applications, as well as advanced correlations and confluences here. Yeah, so that's the educational course. Continue on here. We have a community, like Ronnie had said. We have a Discord, we have a forum, Twitter, our YouTube channel, a lot of videos on YouTube channel, and then our live webinars here. And then one more, and this one's important, is our knowledge base here. This is where you can get a lot of questions answered. Okay, so here in our knowledge base, you're in the user guide section right now here in the knowledge base, and you can go through here. We have a host of different add-ons that we created as well in the knowledge base here. So if you have questions about like the stops and icebergs, okay, you can get that information here. Stops and icebergs are sold separately on the Bookmap marketplace. Okay, because where is that marketplace? Here it is. We did this on purpose because it's expensive. I mean, it's 134 per month, but the insights here, are pretty interesting and should offer a really nice confluence. The MBO bundle with the stops and icebergs in here. Why it's in here is because it's only for CME group futures, and it's only for Rhythmic data. You have to have Rhythmic data. They're the only data provider that offers MBO data. So you need Rhythmic, and then you need to have this as well. All right, so I just want to go over those details. I try to answer those questions up front. Let's see. Other than that, oh yeah, let me show our YouTube channel as well. Just to go through the basics here, because you can see the upcoming streams and webinars here. Pro Trader webinar recordings. We'll have Ronnie and Dave in here. Some live stream recordings in here. We had a crypto series. But the bonus material down here, there's all sorts of stuff in here, but the educational courses here, this one is the one I want to show you, features and components. So we'll click on view full playlist, and in here you'll see all these different videos that will help you along with that knowledge base answer any questions. So if you have questions about the columns, or liquidity, or like comparing to a dome, or volume bars, you know, all of this stuff. There's likely a video for it in here. There's 58 videos in here. Okay, so they're very short, as you guys can see, a couple minutes, yeah, each. And that's it, Ronnie. I think I've
amazing.
exhausted it here. Oh,
Yeah.
we're finally getting a move here. Jeez, that took a while. But look at see how like we started to look at it a little bit further, and then look at this guy who came in here, right? So because of this guy, we started to trade up into here, and now we're looking for our what was our target? It was our 73.40, right? And it's starting to inch up there. You know, this guy kind of had to come in here and show some interest at a higher level in here. And that's my opinion. And that's why we started to trade higher here. Now we need to see that actually again happen. It looks like this guy, maybe he can pull and add higher here, somewhere, you know, maybe somewhere up in here, right where price is actually. If it's dark in here, there's no liquidity, right? So what that means, or is there's very little liquidity. There you can see the contracts here. What that means though is because it's a thin market, that means with not too much selling, they can come right back down to these areas. So that's why we're always looking for the skew in the order book to give us that additional insight. And then, you know, it still bounced around in here till we finally got some buyers and see how they start to pull in here and it becomes darker in here. That's when it's easier for the buyers to lift it up into these areas, okay, on less buying basically. Yeah. So anyway, just some details in the order flow here.
Yeah, Bruce, this is amazing, guys. Thanks to Bruce. Like, as an educator myself, Bruce, this is amazing. Like I love this. I love this. I love this stuff. So, Bruce, do you want to take some questions? If there's any,
sure.
Do you have time, Bruce?
Absolutely.
Okay, because I know you went longer than expected. So, guys, like that was a thorough like explanation of Bookmap. Make sure everybody head on over to their YouTube channel, subscribe, follow them. There's so much material. Basically a lot of your questions can be answered over there. There's a lot of stuff. They got Discord channel. So who wants to shoot? Who's got a question for Bruce? Anybody?
So I'm looking through the chat. I don't even know where to start, Ronnie.
I think you answered a lot of them through this, but Arturo says, is there a demo, Bruce? Do you guys have like a demo?
Yeah. So, oh boy, I'll tell you, our history with this, the demo is kind of interesting. Here, I'll show you. Okay. So we go to bookmap.com and then we'll click on pricing again here. And then there is a free version here. So we offered, God, we went back and forth with so many different ways, you know, 2 weeks trial, free trial with, you know, with this and that. And what we found is that this is the best solution. We have this digital free version. You always have access to it. It is always free. It will connect to one cryptocurrency for real-time data, and that data is free from the cryptocurrency exchanges, but only one at a time. And then you also get a delayed feed for stocks and futures. So it will give you a good overview of what Bookmap is all about, but it won't, you won't be able to connect it to, you know, more than that one crypto live market. If you're a crypto, well, that answers the question. If you're just a crypto trader, then you go with the digital plus version, and that'll allow you the connection to all the crypto currencies. So yeah, that's the, so check it out and see if this is something that, you know, you like, and get with the delayed data. And if you like it, then give it a shot, you know. Go for the global or global plus and try it for a month and see if you like it. And then if you like that, then great. You know, maybe you want to get a higher time frame, or, you know, longer term subscription or lifetime version.
Remember, guys, like you're investing in your education, your investing in your future, guys, you know. So think about that, you know. Maybe we got to cut back a little bit of spending, some things that we don't need, you know, maybe. And this is for your future, guys. If you want to head on over and get it, then you know, it's something for your financial education. Help gives you an edge in the market, as you can see. But it's a great product. Sammy has a question. Sammy, you can unmute your.
Hi, Ron.
Hey,
How are
Sammy,
you?
how are you?
Hi, Bruce.
Good.
All's good. All's good.
Hello.
Just have a question about when is the expectation of pairs, forex pairs, to be added to this? That's my question.
I'm sorry.
Forex pairs. Are you ever going to get the data for currency?
So yeah, good question. We're not able to connect to Forex because the volume and the order book it's not centrally located. So it's you know, via banks and some of the brokers who might be taking the other side of your trade. So we don't know what it is, and we can't. You're not going to get much out of it if we did connect. You wouldn't be able to see the liquidity. You wouldn't really. Yeah, you'd be able to see the volume, but not much, right? It's even that's kind of. I guess maybe it's gotten better over the years, but I've never really trusted the volume very much in Forex.
Okay, thanks.
Yeah. So we do have traders though that do this. They will get rhythmic data or data for the CME, and then they can look at the currency futures, look at Bookmap there, and then take their trades or execute their trades in the spot market.
Okay, got you. Thanks so much. Thank you, Ron.
Yeah, no problem. Guys, any other questions? Just please raise your hand. You know, don't be shy. It's just me and Bruce here. Just don't be shy, guys. Come on, because I like we can't go through the entire chat looking for questions. So I'm sure you do. Jeremy, yeah, 1 second. Jeremy.
Hey, what's going on, guys?
Hey, good.
Hey,
How are
Jeremy.
you?
I'm good, man. I'm good. So, quick question, two actually. One, the MBO bundle, does that include both the stop and the iceberg?
Yeah, it does.
Okay,
There's, in fact, I'm glad you kind of asked that. What were we looking at? We were looking at, was it gold and stops and icebergs? Yeah. We can see the on chart indicator here as well. And or maybe it was crude. Boy, crude just took a dump, huh? Down to 90. Anyway, the on chart indicator and lots of icebergs down here at the bottom of the range here, you know. So at 90, look at the iceberg buying. So let's see if we get enough buyers in here, lift it back up into maybe this 90-40 area here. But the stops and icebergs on chart indicator. Let me show this here.
Oh, that's exactly what I was going to ask, because I saw Tom using that.
Yeah, exactly. So there's all sorts of ways to configure it because it could get kind of messy up here with the on chart. But what I really like to use is this automatic threshold. And then what I'll do is I'll take the stops and icebergs. Hold on a minute. And then I will then kind of mute or take down the ones that don't meet the threshold here. I'll take down the transparency here. So I think it is down. Okay, so that's good. And let's do the same for stops. Yeah, so yeah, the automatic threshold here is 10. Is based on 60 minutes and kind of an average of 60 minutes.
Bruce, if you're ever playing around with all these, where's like the default function? Just go back to default if you're just playing around with all of this stuff.
Yeah, I mean, most of the stuff is, you know, down here, restore defaults.
Mm-hmm.
You know, you can do it there.
Okay.
With the heat map setting, if you go to, you know, right click it in here, or you go to the heat map settings up here, click on heat map, restore here.
Okay.
You'll find it in there somewhere.
Okay.
It's usually some sort of button to go to the default. And it's a good question because in here, restore, because for the most part, I'm using more or less the default settings.
Mhm.
It's just easier to demo, and I like it. I'm used to it. I like the default settings.
And one last question, real quick. I noticed you mentioned before that the data is real time. Is there any delay at all in the data? I know a couple of other people asked the same question.
No, there shouldn't be at all.
Okay, cool.
Yeah.
Cool. That was it, man. Thank you so much. Great, great webinar. I've been actually watching Tom and the other gentleman. I think his name's Mike. I'm not sure, but I've been watching both of them, the 10 o'clock and the 11:30, and it's pretty awesome stuff you guys are doing here. And I'm glad Ronnie and Dave brought this to Stop Sniper. I love this stuff.
It's
Excellent,
awesome. It's
excellent.
awesome, Jeremy.
Thanks, guys.
man.
Appreciate you
Jeremy.
both. All right.
Thanks,
Okay.
Jeremy. Thanks
Yeah,
for the
take-
question. Okay. Michael, you can unmute your mic.
Hiya.
Hey, how are you?
I'm good, thanks. You?
Good. Perfect. Thank you.
Right. Yeah, really appreciate this. One question: can you trade directly from this platform on an MT4 account?
No, it will not. It will not. So MT4, who's your broker? Who are you using?
MFF.
So you're using a Forex broker.
Yeah.
Okay. Yeah. So we have partnerships with a lot of different brokers. And like AMP, for example, offers MT5. Yeah, you would be able to use it for that. Basically, you would trade from Bookmap. You would be able to connect to your AMP account, and you just trade directly from Bookmap into your AMP account. MT4 is just the platform, but it's really just the connection to the broker, and we don't offer connection to that broker.
Okay, so I think at the moment I'm probably going to have to read the charts and then trade from the MT4.
Yeah, or I can also show you here in our knowledge base here. Hold on. Go to knowledge base, and I know we have a list of some brokers in here. If we scroll down in the user guide area, partnerships. Yeah, hold on. Let me look up broker. Okay. And over here, what do we have here? Yeah, well, these are connections here, but that's not what we want. Hold on a minute here. Boy, they kind of shifted things around a little bit. I know we got it. I've looked at it a million times. Partnerships. Boy. Anyway, yeah, we've got it in here. I just got to find it. If rhythmic, these are all kind of error issues here. So
Bruce, if you find it, you can let me know, and then I can pass it all on to the team.
I'll have to kind of search for it and find it in here.
Mhm.
But
Is stock sorry, are we going to be offered a discount, or do stock I get a discount?
Oh yeah. So as I was kind of describing here, let me find
Yeah, they get a
this one
rebate
here.
from this.
So yeah, so what
Yes, good.
what Stock Snipers can offer is from that link I put into the chat here. I can put it in again. Here, it will take you to this page here, and then you can either get the regular subscription. These are offered from the website as well, but the special offers here, they're a little longer term, 3 months, a year, or lifetime. And I went over the details in that.
Okay, thank you.
Sure.
Okay, that's great. Thank you very much. We really
Sure.
appreciate that.
Oh yeah, sure, no problem.
Take
Thank
care.
you.
Bye.
Okay, so we got Megus White. You can unmute your mic.
Hello.
Bruce White. Yeah. Hey, how are you?
Hey, Ron, how are you?
Good.
I have a question for Bruce.
Mhm.
Bruce, are there not specific brokers for it, where you can directly have the data from Rhythmic and all those together?
Yeah, we do, and that's what I was just trying to find in here. But
Is AMP, is that a broker?
yeah.
And then you got the other one, the green one. The not know. I forget the name.
Yeah, we have S5, Edge Clear, AMP.
F5, yes, S5.
S5, yeah, and there's one in Southern California. God, I forget their name. But yeah, we have a relationship with a host of different brokers that connect, with Rhythmic, with CQG, whatever really you want. It doesn't matter. But I would, if you do go with one of those supported brokers and you're trading futures, then ask for Rhythmic data. They will have it.
Okay, yes.
And yeah, you will just get. I can show you here. I said I would show that sub-second level data in here. It's pretty amazing. This is
very amazing.
Yeah, I mean, I'll tell you our backstory in here because basically Bookmap, before I joined, they're quants and financial engineers, and they were developing their own algos, and they needed a way to visualize their algo performance. And what they came up with this system of showing the liquidity and the volume and best bid and offer to see how their algos were performing. We showed it to some others, and they really liked it and said, well, if you make that a platform, we would buy it. And that was the birth of Bookmap. So
yeah, very interesting.
So just like this example up here in the S&P, it traded into this liquidity here, but we can zoom in here and we can see every single transaction. Down, we're at still millisecond level here, but let's zoom into this one. It's bigger transaction here. We can continue to zoom in, and it's like trades within trades, basically, as you can see. And now we're looking at microsecond level or millions of seconds, and we can zoom in more and we can look at nanosecond level. So it's all, and we needed to have that kind of granularity to be able to show what was really unfolding in that market here.
Our next webinar will be nanosecond scalping, guys.
No.
Then I have another question also. Is it possible for Apple? Because with Apple, Microsoft based stuff, that's always complications with Apple.
With a Mac, sure. We connect to, we have a Mac version as well.
You have a Mac version also, yes?
That's correct.
That's always a problem with Mac. It's a good computer, but always a problem with the compatibility of the software. So that's my last question. Thanks, Bruce.
No, we have a Mac version, and I haven't heard any complaints about it. Okay, iPad, no.
Yeah, okay. Have a nice evening. Eh?
Okay, thank you.
Thanks for the question. Thank you.
Thank you for the question.
We got Carlos. Did you get your mic? I was going to ask your question right now, Carlos, but if you got a mic. Carlos, do you want me to ask your question, or did you get your mic? You don't? Okay. Carlos, Bruce, he's asking, okay, is there a difference between a contract that was pulled back and got plotted in the chart from the one that was actually executed?
Yeah, that's a great question. So let's just look at this S&P in here. Or I'm sorry, this is Tesla. Let's look at the S&P. The S&P here, like if we take a look and zoom out a little bit, well, here they pulled, right? They never transacted. They showed liquidity in the order book up here and then pulled it away. Here, they came into the order book here. And at this point here, it's kind of interesting. They started to pull some of it, right? In fact, we went from this liquidity here, which is 199 down to 182. And then look what happened here. The best, there's one transaction over here. Let me continue to zoom in. So not one transaction up here, but the best offer was up here, but no one traded. So then they kind of pulled some of that, and then it started to transact here. And this player, see what they're doing, pulling from here, adding on the bid, pulling from the offer, adding on the bid, starting to come in. Great. If that's the case, very simply, like, not with a 2-tick range here, we're looking at a range. And if we get buyers in here, we'd be looking for the range move up to here because of this activity in here followed by buyers. Same thing we were looking at in gold. And then we'd be looking for that move up higher. Okay, so yeah, it unfolded. Just based on what we saw in here at these kind of microsecond levels or sub-second levels. So I hope that answers your question on pulled liquidity versus that transacts.
I think that did.
Okay.
Awesome. Okay, Sherry.
Hi, Bruce. I really like this webinar and this book map, and I'm so excited about it. And first, I would, can you hear me?
Yeah, I hear you just
Okay,
great, loud and clear.
Okay.
Sherry brings the energy here at SST.
Yes, I know. I'm so excited. Okay, first, I want to start with the like the free version because I want to test it and try it. And with the digital free, okay, so you said you can do one crypto, and is it one at a time? And is that real time, the real time futures and stocks data, is that delayed with the demo?
The demo, the stocks and futures data is delayed. The cryptocurrency would be live though, but only one. So if you want to look at Bitcoin or you want to look at Ether, something like that, then it's up to you, whatever you want to look at.
Now, how delayed is it?
It's kind of weird. The delayed data is very strange from DX feed. Sometimes it's like 72 hours. Sometimes it rotates around. Sometimes it's 36 hours or 12 hours or something like that. Yeah, they have some sort of way of doing that. So you won't be able to kind of like, you would be able to look at it in hindsight on maybe your candlestick chart and kind of try to match it up, but it's not like 15 minutes delayed.
Okay. And also, okay, do you still need that rhythmic data feed for that demo or not?
For the free version, you don't. All you need to do is download and install Bookmap.
Okay.
You could be up and running within like a few minutes, basically.
Oh, okay. Okay, great. I'm ready to kind of, take a look and see.
Yeah.
And
kick the tires.
Yes, sounds great. Okay. And now I know you was talking about the stop hunts and the icebergs. Can you kind of go over that? You address how the stop hunts.
So like a stop hunt here, we'll take a look. I mean, this again, like we're almost up to 2 hours, so thanks. And I know I heard you have a sick child, Ronnie.
Yeah.
I mean, we can go over maybe the stops and icebergs in more detail another time.
Okay.
But it's up to Ronnie. I can show them here, but why I'm saying that is we can see. It's just amazing. You can see the evolution of the entire move here of the stop run, etc. So I'll find a good example in here in this S&P, and then here's 458 that got stopped out down here, we can see precisely when the stops start to transact, boy, it's a bunch of small. Again, it's a bunch of small transactions. This one should show something. Yeah. Okay. So here's what happened. Price is going sideways here. The sellers come in and hit the bid, and immediately they hit some stops here. We have the on chart indicator here that should show it too. 208 altogether. So the stop run occurred here. Now it only went one tick, but from here onward, these are all stops. We know that. It's just fact. Now, it could be someone who maybe they entered with 203 contracts. We don't know, but typically it is a stop loss order that is triggered. And you'll see it go several ticks a lot of times. In this case, it only went 2, but we know when it transacted and when it stopped. You know, that's kind of the detail in the granularity. And you can see that matches up with the subchart here as well. So
thank you. Thank you very much.
Mm-hmm.
No problem. Thanks, Sherry, for the question. Okay, I think Lisa.
Hello.
Hey, how are you?
I've been watching you guys on YouTube, and my mind is absolutely blown. You know, it's just so completely different than what we've been doing. And so I guess my question, you know, I haven't gone through your website, so I apologize for coming to the table kind of unprepared. But I'm assuming from watching you guys on YouTube and now watching this, that TradingView is kind of like irrelevant. Is that right?
Well, of course it is. Not.
Well,
I'm just kidding.
Bruce is honest. Okay, Bruce is honest. That's what we like. We like his honesty.
No, I just want to make sure I'm clear on, you know, like, because this is completely different than what, and so I just want to make sure I fully, and not only is TradingView, then our MFF broker would also be irrelevant.
I would say that they're a different platform that's showing different things.
Right.
They're showing higher time frame, you know, you can go back weeks, months, years, whatever. Bookmap, because we're showing complete depth of market in here. Like, you know, I can zoom vertically here, and you know, there's contracts up here at like 5,000. You'll see like here, there's 39 contracts up here at 5,000. S&P's never even traded up there. And this is live though. So there's a lot of data in here. Every single price level. It's not just the last transaction, it's every single price level. So it's a great question, because the backfill data in here, I've only got data up to, well, last night at around 7:30 or 8 o'clock. So it's not for viewing those higher time frames like that. So what I usually do is I will look at my candlestick charts. This is Rhythmic R Trader. I have a daily, an hourly, 15-minute, and I just want to get a feel for ranges in here. How's, you know, where were drops, where's you know, where are there wicks, buyers, sellers, etc. Then I look at Bookmap, and then I can zoom in here. So that's the strength of Bookmap, is being able to see all of this data in here at these lower time frames. But that said, you know, we went through that crude oil example, and this is for the day. And this would be a nice little swing trade here. And you know, we look at the target, you know, 91, and why, you know, measured move, liquidity, etc. So TradingView will not be able to show this.
Yeah, I understand. Okay. And then my last question is because I do hear a lot of swing trading. We're scalpers. How do you see us as fitting into this?
Oh God, I mean, you're gonna love it. I mean, like in terms of scalping, you'll find setups all the time. It really doesn't matter. You know, you can zoom in at sub-second levels. You can scalp. You can look at a higher time frame scalp. You know, maybe like let's go back to, well, crude oil's fine. We're down at that 90 level here. Here's a move back up to the top of the range, take some off, zoom in here. Let's take a look. Okay, this is where it broke out at 08. What's happening in here? Well, we got some high liquidity very close here, but are we still finding buyers in here? A little bit. Just ran into a little bit of icebergs. It's still here. See the iceberg 5 traded, and that's it so far. Finding buyers on the bid, great. Finding our buyers here. We're in line with 20 now traded on
Perfect
icebergs.
scalp, guys. Perfect scalp.
We're looking for going higher, right?
20 points right there. Easy.
So hopefully, this, we'll see if this guy, how much this guy has in here, but 20, 21, and just 22 now. Maybe it's hopefully it's a big one. And then we see that, the reaction is more buyers back up to this area here of liquidity at 90.45, just above that swing. So you can look at the same concepts here at just sub-second level as well. It's really, this kind of answers a question about the education as well. And this is what we recommend to people when they first get Bookmap, is to put their education on volume profile or candles or patterns and head and shoulders, put that aside and just understand, or start to understand, parts 1 and parts 2 of our educational course. Because let me find it here. Here. Here, I'll put this link into the chat. This is open to all, so you can watch these tonight if you wanted. Parts 1 and parts 2 here at part 3 here, or number 3 here. Watch this one and this one, because this is what makes the market move. Something like TradingView is not going to be able to show that, because they're not going to be able to show that kind of granularity.
Right.
To understand the market mechanics is essential. Now, once you have a kind of foundation on what makes the market move and influences the market, you can apply that to any trading strategy. So then that's when your candlesticks will come back into play. That's when your volume profile will come into play, or your patterns. We can take a look at patterns like head and shoulders or whatever it might be, and start to understand the order flow within it. Like here, we have a double top, or kind of triple top. 1, 2, 3. Is there a lot of buying up here? Not many. Did they even make a higher high? No. They didn't even break into 91 here. So now we're looking for, let's get rid of the drawing. Now we're looking for the order flow here. The sellers to start to come in. When do the sellers start to come in? Well, and look at them here. And they're already here, right? And there's more. All right, well, maybe they can break it back down to this level here of liquidity. So now you're understanding you have a different kind of understanding of what that double top might be, or whatever the pattern is.
So we can
it makes it so much more clear.
Yeah, so we can apply our our technicals that we've been using to Bookmap and look for trades that way.
Absolutely. Mm-hmm. So however you trade, however Ronnie and Dave trade, and what you guys are looking for, you will look for that, but you're going to look for order flow to support it.
Mm-hmm. Yeah, Elisa, it's like you see where Bruce pointed out, where it was like the double triple top, and then we're coming down to the neckline. But when we're looking on TradingView, where we see where it might be an impulse move break, and then they fake us out, here you can see to the left where all the sellers are parked, and then now you get more sellers. What's going to happen? Look at that nice little imbalance in the market, and there's that nice drip, and count your points. That's 20 pips. And what are we on, Bruce? 5 minutes. Yeah. It's 5 minute scalp, 20 pips.
Yeah,
It makes it so much more visual. Like it's seeing this. It's a million times better than TradingView. TradingView is just like a platform to help with technicals and learn, but this is more advanced when you want to actually apply everything you've learned now with live liquidity.
Okay.
Yeah.
and look at it break down. Look at the
I can't
pullbacks
wait
just
to
getting
dig into the
eaten.
website, Bruce. I can't wait to start, getting into the education that you have on there.
It's awesome. Their education is top notch, guys. Like for
Thank
real,
you.
it's really good. They have amazing educators on YouTube daily. Bruce himself is one top educator. So guys, just like, don't watch Netflix. Take it easy with the Netflix. Watch some of the videos here and help educate yourself. It's a financial education. Like I said, can change your life in a couple years. But you got to put in the work. You got to put in the work with this stuff.
Well, yeah, and I mean, I also kind of want to reiterate, like, what Bookmap is, like, as we started off, is the tool.
Mhm.
And we're providing like a woodworker or whatever it is with a woodworking tool. Now the artists like Dave or Ronnie, they're going to apply the way that they use it, and that's where you'll get the magic.
Awesome.
So looking for a higher probability and looking for order flow to support the moves you guys are looking for.
It's awesome. I love this platform, Bruce. I love it. The team knows how excited I am about this. Ian has some questions. Ian.
Hello.
Hello, Ian.
Hi, Ian.
Hi, can you hear me?
Yeah.
Hi. Great presentation, Bruce. Hi, Ron. Great presentation, Bruce. Love it. Love the platform. Really good. I know you've been going quite well. Just a really quick question about billing. I think you touched on it a little while earlier. If I was looking to say just go with the Global Plus just for like a month just to get used to it, because there's a reason I don't use Trading Views, because it'll take me forever to learn. If I did the Global Plus monthly, obviously went through, you say then about the data feed afterwards. Is that a simple process to go through to link the two? Obviously you mentioned Rhythmic as preferred.
Yeah. I mean, we have videos and information on the knowledge base that should guide you through that.
Okay, so it's a pretty straightforward process. Nothing too difficult.
Yeah. I mean, basically, you'll come up to, once you get your credentials, you'll come up and create a connection here, configure a connection, and once you do that, then you'll add, click on I don't know why it's not showing up here, a plus tab, and you'll open up a new symbol, and that's it.
Okay.
Yeah.
That was it. Yeah, literally. Great stuff. Thank you, Bruce. Brilliant stuff.
Thank you. Thank you, Ian.
Absolutely love it. Thank you.
Awesome. Thanks, Ian. Let's see here. Withers. What's up, man?
Hey, Ron. Hey, Bruce. Thank you, guys. This was an amazing presentation. The one question I had was on replay functionality. So it's always good to like backtest and practice strategies. TradingView has like a replay functionality where you can go back in time and play like bar. Is there a way to do that with Bookmap to go back in time? I saw you can go back in time, but where you can actually do replay where you don't see the data ahead of time in hindsight?
Yeah, absolutely. So we'll go back to the knowledge base here and the user guide, and we can go down to replay mode. Let's just do a quick search. It should show up here. I know it's right in here. I'm not sorry about this, guys. Kind of fumbling with the knowledge base. There's a lot of stuff in here, but you'll find information on replay mode in here, and then there's some videos on it too on our features and components playlist here from our YouTube page, and you can look for replay mode in here as well. Here's how to debrief your trading using replay mode. There's this one's like 19 minutes. This one will give you an overview, and I think there's another one on replay as well, I'm pretty sure. Yeah, practical uses and replay data mode. So there's like 3 or 4 videos in here that answers that question.
Okay, perfect. Thank you.
Mm-hmm.
Yeah, guys. Okay, so I don't see anyone with hands up anymore. We don't want to keep Bruce too long because it's 2 hours, and I know he's a busy dude. So is there anyone, last question or Bruce, how are you for time? Is it?
Oh God, I'm
Yeah.
sorry I went over like this.
No.
You know, I just kept going, and you know, there was
I just saw
lot
earlier
to
in the
cover.
chat a question, maybe like looking for securities, like, and how to look for where we're going to look for October, November, December, NYMEX, COMEX, and things like that. Can you just show the team real quick where to maybe add and look for securities and how to?
Sure. Another thing, it's right here in Bookmap. I go up to help here, and then you can go to symbols. We have a symbol guide in here. The Bookmap portal, once you log in, there's information in there. There are marketplace. A lot of these links that I showed, our Discord, our user guide, are in our knowledge base, you know, getting started guide, etc. So we'll go to symbols, and then that'll bring up our symbols guide in here. And, you know, it's for futures, there's different data providers that have different symbols. So like CQG sometimes calls it very, very differently, the symbol, than Rhythmic or DX feed. So for example, if we look at S&P right here, you know, here's your symbol guide, ES, and then month and year. So as you can see it here, ESU, which stands for September, and then 2, which is the year, you know, the last digit of the year. And it trades .CME, so that it trades on the CME. I can show you here, for example, I do very, very quick, simple thing to look up what is a current contract. Like, for example, crude oil, I actually just changed it today, and I'll show you how. So I just do Google search for CME volume crude. Here's the contract specs. So and we want to read, you can see it's V contract here, but let's scroll down. We're in the volume and open interest section. That's where you want to be. We'll scroll down here and look at total volume. And you can see that right now, actually, it has not updated here from yesterday. This is for the 17th. But you can see the volume kind of edging up here. It has flipped. This contract is still trading, but this one, the October one, has more now. Yeah, that's yeah. In fact, you can see it here, open interest as well. 68,000 or 60,000, and then 248,000 now. So this is the current contract. And that's the way that I like to look it up, and see the roll from less volume or less open interest to more.
That's great, guys. Okay, so that was a question. If I read in the chat earlier, someone was saying about the securities and symbols and things like that. So any final questions, guys? And then we'll wrap it up. It's been an amazing afternoon with Bruce, and we thank him for doing this. He took time out of his busy day just for us. So it's amazing. One last question, Val, and then we'll wrap it up. Val?
Real quick, I must have missed it, but how do you change the time frame?
Okay, great question. There is no time frame. So let me explain. So guys, this turned, it took a long time here. We had to come back down almost to that point of control on gold, and now we're getting the move we were looking for. That took a while, but anyway, the time frame. Well, we have candles in here, and you can, you know, right click on the candles and go to candlestick settings and look at 5-minute, 15-minute, whatever. But there is no time frame in Bookmap, and the reason being is because it's pure price action. So what we do is we kind of divvy up the chart on the x-axis here, and you can see there's 15 minutes between each vertical dotted line. If I zoom in, that's going to change. Now it's down to 5 minutes. If I zoom in more, now it's down to 30 seconds or a minute, or, you know, whatever. That kind of divvies up the chart so you can kind of understand the time frame. And you could use candlesticks if you like as well. So basically what I like to do is kind of zoom out and I understand the structure. Okay, now, or here, let me use the S&P. I understand this structure here from 12 o'clock, you know, this high here, and then this structure, and then this breakout structure here. So let's look at the candlestick chart. Well, here's that high, here's that structure, and here's that breakout. And that's all I need to kind of understand. There is these time slice tools here, or this tool, where if I select 15 minutes, that's going to show you 15 minutes in the viewable chart range though. It is, you can see there's 2 minutes between each vertical dotted line. So it's not a programming error. It's a 15 minutes continuous sliding window of 15 minutes of data.
That makes sense, guys. Got it. Okay, guys. Okay, Bruce, we don't want to keep you too long. I think we got all the questions, guys.
I think I'm exhausted. I think everyone else is exhausted.
Yeah. So let's all take a break, guys. Let's thank Bruce for taking time out of his day to spend it with us. It's amazing. Guys, if you're interested in our Discord under affiliates, the link is there. Check it out. Make sure go to YouTube. Subscribe to the channel. They got education, they got everything. They do live educating. It's an awesome platform. We're more than happy to be partnering with Bookmap, and so it's amazing. Bruce, like Dave and I are really like, we love price action and live liquidity and things like that. So this is a perfect fit for us and the team. So thank you so much, guys. Knowledge is power. So just continue learning, guys, as much as we can. And thank you. Bruce, would you ever do this in the future with us again and things like that?
Yeah, sure. I mean, I know this was exhaustive, and that was kind of part of the goal, so that there's a reference here. Maybe we can put some timestamps into the video that if you want to, what's the like time frame or whatever, and it'll go to that point and answer that question for you.
Awesome.
But in terms of webinars, Ronnie, I mean, I think we're going to kind of flip that one over and have you guys over on our.
Yeah, we can't wait. We can't wait to, and guys at SST, we're going to do Bookmap webinar series. We're going to do live trading with Bookmap. So we love this platform. Okay. And maybe we'll eventually just move over to Bookmap and we don't even need TradingView anymore, but let's keep that on the low, but maybe we don't even need that platform anymore. So, but it's good to have a couple platforms, you know, because sometimes you get comfortable with a platform and then you want to learn something new, but you have also something to fall back on. But if this is new to you guys, like, just take your time. Just take your time. Take it slow. Don't rush the process. You know, take it day by day and course by course and lesson by lesson, and get familiar. Same thing with what you guys do with us. When we have a lesson and you understand it, put a check mark. If it's something you got to work on, put an X. Same with Bookmap. If there's something you're learning about of the depth of market and you're learning it, but you don't know it 100%, maybe then that's something that you can come back and learn at another time. But just take your time with this, guys, and we'll help you make sense of it. And but it's nice to see what's going on behind the scenes. We're actually inside the book. This is what really I love it. So thank you, Bruce, for doing this. We really do appreciate you, and the team does too. So thank you.
Thanks so much, Ronnie, for everything here and the opportunity to present and work with you guys. Please just hit us up, ask any questions, and happy to help you out.
Thank you guys so much. And yeah, guys, enjoy the rest of your evening. We'll come back, guys, a little later on this afternoon for our webinar. And yeah, so everyone relaxes right now, unless you're trading power hour. Gold made its move, so got up to 1775. It was it did touch up there. Did we kiss it, Bruce?
Let's see. No, just shy of it.
Just shy.
Yeah, they're actually at 10 at 10 cents, but yeah, still looking for it. I mean, it took a while and some back and forth, but this is some good stuff in here. So anyway.
Awesome, guys. And thank you guys so much. Enjoy the rest of your day. Again, thanks, Bruce. And tell Josh thank you to him as well. And thank you, guys.
Yeah, thank you very much, Ronnie.
No problem, guys.
Okay.
Enjoy your day, everybody. And we'll see you again.
Bye-bye.